Bloomberg's world headquarters in New York, I'm Scarlett Fu.
And I'm Tim Stanovac. Welcome to Bloomberg Crypto. A look at the people, transactions, and technology shaping the world of decentralized finance.
Here's what's at stake today. U.S. Treasury Secretary Scott Bessent says we are at the 1 yard line for the Clarity Act in the Senate. Crypto stocks are surging in today's session.
Plus, we talk to Sonali Theisen of Bank of America. BofA elevating her to a new role to help steer the company's approach to crypto and AI.
And shares of 21 Capital are falling in today's trade as a proposed merger involving the company is scrapped.
That's all ahead on Bloomberg Crypto over the next hour, but we got to take a look at where crypto stocks are and, of course, crypto assets are on this day. Stocks are trading higher, crypto stocks, alongside a broader rebound when it comes to risk assets. Investors encouraged by renewed momentum for crypto legislation in Washington, as Scarlett mentioned. Coinbase and Strategy are both higher. Coinbase up by 12.8%, Strategy up by close to 5% right now. Mara Holdings, Bitcoin miner, also among the leaders, up about 7% right now. Flipping on over to some of the assets that we're focused on, Bitcoin and Ether are also advancing, up 2% Bitcoin, Ether up about 1.4%. Gains are spreading across many of the largest digital tokens, Solana up to in the green, about 0.3%.
And against this backdrop, Tim, we're seeing Bitcoin ETFs record a second straight week of net inflows, which comes after almost 2 months of capital flight. You look at the two bars here at the far right representing weekly inflows. They're fairly minimal, though, when you compare it against outflows for much of the second quarter. But it is a start, Tim, and it's raising some hopes that cryptocurrencies might be finding a floor. Now, on Friday, Tom Keene and I spoke with economist Nouriel Roubini on Bloomberg Money to get his thoughts on investing in crypto, and here's what he told us.
Talk crypto. The young want to know about crypto. You and I love crypto so much. 120 to 60. Is it going to 30?
Most likely, yes. Most likely, yes. I mean, really, listen, crypto is not a cryptocurrency. They're not a means of payment. They're not a unit of account. They're not a stable store of value. They're not a single numeraire. So calling them cryptocurrency is actually a misnomer.
Amid all this price volatility in digital assets, T. Rowe Price has launched a new ETF, the ticker TKNZ. It's the first actively managed multi-token spot ETF. Let's bring in Blue Macellari, the head of digital assets over at T. Rowe Price. Blue, it's good to have you back on the program. It's been quite some time since we last spoke. I want to talk timing here. Why is this the right time to launch a multi-asset ETF?
Yeah, so I know that we've been in a deep bear market for several months, what we call a crypto winter. From a portfolio management perspective, that's sort of the best time to launch a multi-token ETF. We're really excited about where the space is going. There are a lot of key thematic drivers. We have the regulatory pieces falling into place sort of one after another, which has been terrific. And I think that we continue to be really excited about adoption on multiple fronts, including tokenization and what that means for crypto assets.
So, Blue, I guess one question that always comes to mind when I hear T. Rowe Price, it's been a firm that's been fairly cautious on crypto for years. What's changed, and when did that change begin?
Yeah, I understand. I think a lot of people were sort of surprised with T. Rowe Price coming into the space. But for us, we've actually been building in the space since 2022. And we've been trading a multi-token portfolio internally since 2023. So we were waiting for one, regulatory clarity and a sufficient sort of regulatory construct for a true multi-token product. And the main thing is that we're active managers, right? So we believe in fundamental, research-driven, active management, and that was what we've been building towards for several years. And so we're excited to be bringing something to market.
The multi-token part of this really piques our interest, and I'm curious, in a market where Bitcoin has just outperformed nearly every other digital asset and diversified crypto basket over a multi-year period, how do you make the case for diversification across 9 different tokens and why that's better for just holding Bitcoin?
Yeah, I think from a investment perspective, we look at Bitcoin as a very different sort of unique macro asset. And when we look at the rest of the tokens and the chains that are in our investable universe, those are really disruptive technologies, and people want exposure to these disruptive technologies. When we think about multi-trillion-dollar asset managers, large size, globally important banks, all embracing tokenization, NYSE, NASDAQ, DTCC moving in that direction. Right? If we're going to tokenize, this stuff's going to be built on public chains and that disruptive technology, and that translates to value for token holders.
You stressed active management here, and in equities, that's got a 7-year track record, a lot of data, a lot of historical data, but active management in crypto basically has none in comparison. What does your research process look like when the oldest asset in your portfolio, in this particular fund here, has 16 years of history, and the youngest, Hyperliquid, launched at the end of 2024?
No, that's a great question. So we have a 3-pillar investment process, and crypto is unique. It's an emerging asset class. And so sort of very in line with our DNA, the core foundation is fundamental, right? We look at the technology, we look at the economics. The technology tells us if the chain can win. The economics, or the tokenomics, tells us if how and when token holders and investors are going to participate in that success. Then we look at things like drivers of growth. That's ecosystem partnerships. It's addressable market. It is whether this is a good product market fit for a given chain in a given sector. And then it's crypto. So the third piece is you absolutely have to look at momentum and trend and themes. You need to sort of understand where the market is, where things are moving. It's a market that trades 168 hours a week. You can be right on the fundamentals and still get run over by somebody on Twitter. So it's a complex and it's a very different process than many types of equity or fixed income investing.
Blue, Scarlett had this great question about T. Rowe being fairly cautious on crypto for years and what's changed. And just to follow on that, given the reputation of T. Rowe, 2/3 of it's close to $2 trillion in assets are in retirement accounts. I mean, you think about the typical client, it's a 401k retirement saver. TKNZ, it's not registered under the Investment Company Act of 1940. It doesn't have the same investor protections as your equity and bond funds. I'm just curious, about the discussions that maybe happened internally as this went to market, and you talked about this, about reputational risk. If a crypto product loses 50% of its assets or performance declines by 50% in a downturn, the headline reads, T. Rowe Price Retirement Giant's crypto fund is cut in half. How do you put that alongside sort of the DNA of the firm?
Yeah, so I think that the first thing is, one of the sort of core conversations we had all along is we really believe that more so in crypto than most other asset classes, active management and good judgment are really key. And like everything that we do, we put our clients first, and it's one of the reasons that we have been cautious. It's one of the reasons that we've been very thoughtful in how we've put this together. And then it becomes a question that, investors need to have with their financial advisors, and it depends on those types of individual profiles. It's not going to be for everyone, and we recognize that. But we think it is a really exciting space. We think it's a growing space, and we see the value of active management there, and that's a great opportunity for us.
Blue, before we let you go, I co-host the ETF IQ, so I have an ETF type of question to ask you about. When it comes to fees for TKNZ, you're charging 75 basis points, and after a fee waiver, that's going to 90 basis points in May of 2027. You look at IBIT, which is the most popular passive spot Bitcoin ETF, that charges 25 basis points. So this feels like it's expensive. It's 3 times that fee. Is the implicit bet here that active token selection adds enough alpha to justify 3 times the cost of a passive single token ETF?
So the first thing is that if you have a passive single token ETF, it's 100% allocated to one single name all of the time. This is a market that trades 168 hours a week, and I think it's really important to be able to move with the market, to be able to do that research and be able to construct a portfolio that is nimble and agile. particularly in such a volatile market. The second piece is that sort of the most commoditized end of the single name ETFs are sort of in that fee range. Once you start to look at even single name altcoins, ETFs, single name altcoins with staking, and sort of the very small number of passive multi-token, I think that we're actually priced really competitively given the additional alpha that we're going to bring for that market.
T. Rowe Price, head of digital assets, Blue Macellari. Blue, always good to check in with you. Appreciate your time this afternoon. Well, coming up, Bank of America naming a new head of its global digital asset platform, Sonali Theisen. We're going to talk with her next exclusively about the firm's ambitions in the space. And to access all the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
Let's shift our focus to Money Rewired, the increasing overlap between crypto and TradFi, or traditional finance. Bank of America is elevating new leaders to help steer the firm's approach to crypto and AI technology. Among those is Sonali Theisen. She's been named global head of Bank of America's digital assets platform. She also leads BofA's FICC e-trading and market strategy investments. In her new role, she will provide enterprise leadership for the design, build, scaling, and governance of Bank of America's digital assets platform. And Sonali, I'm pleased to say, joins us now for an exclusive conversation. Sonali, congratulations.
Thank you very much. Thanks for having me.
So you have a pretty big remit. I just went through kind of everything that you'll be covering. How do these two roles, the new role that you've added onto your existing role, how do they naturally fit together?
Yeah, I think there's a lot of synergies. Thanks for asking. So as we've seen electronification of markets, we've seen new technologies be deployed, cloud computing, AI, APIs, and likewise, distributed ledger technology presents a new opportunity for us to do things more efficiently. On the other hand, the strategic investments portfolio and partnering with fintechs, I think is going to be a critical part of the evolution of digital assets. We know we can't solve for this alone. We need to come to industry standards, converge on, models, and I think that there is an important role for fintechs to play in doing that with us.
Well, I'm curious about the push for this new role. Where did it come from? Did it come from existing BofA clients asking for the types of products and services that you and your team plan to develop, or is this something that you're building intending to bring in new money to the firm?
I think about
both
it.
Yes and yes.
Sure. I think about it as continuing to future-proof our businesses, right? Like we are always looking to modernize financial markets expeditiously and safely, and this role reflects an increasing interest that we're seeing in financial services and digital assets. So the one thing that we know, as you said, is we're going to be client-led and platform-focused in our build and our approach for all of this, because innovation needs to work in all market conditions, and we've spent decades building up the trust of our clients through resiliency, through scale, through liquidity provision in all conditions. So anything that we're going to touch is going to uphold those same standards.
The fact that you're keeping your old role and taking on this expanded role is not an accident. Clearly, the firm sees digital assets as an extension of the trading infrastructure that currently exists, not a separate business. But then you look at, say, JP Morgan. It has Connexus as a standalone unit. Citi also built the digital depository receipts through its securities services division. So I guess the question is, what's the advantage of embedding digital assets inside e-trading rather than having it stand out on its own, standing it up independently as its own unit?
Yeah, so this is a broader remit across the enterprise, and as we see use cases emerging across the enterprise and different lines of business, it's important for us to take a coordinated approach across the firm to do so. I think, we are, again, going to be use case driven, client driven. Some of the areas that we're seeing, initial promise and interest are in areas like collateral mobility. There's obviously a sequitur there for the FICC e-trading markets, but, it's not a surprise that we're seeing interest in collateral mobility with rates elevated. Moving collateral around the globe more efficiently has been, top of mind, and this is one more way that we can use the technology to do so. On that technology, one thing we talk about a lot are stablecoins, and I'm just curious about the way you're viewing stablecoins versus sort of building joint tokenized deposits. Bank of America, JP Morgan, Citi, they're said to be building a joint tokenized deposit network that's expected to go live in the first half of next year. Is that something you're working on? Yeah, so I think the firm is engaged in all of these discussions. Okay, so let's say that happens. If the three largest U.S. banks issue tokenized deposits that move to a shared ledger, that's essentially a private sector alternative to the Fed's payment rails and to stablecoins like USDC.
Does that mean that banks don't necessarily need Tether or need Circle at all?
I think that the digital payment leg for assets is what we need to solve for in the U.S., and I don't think that there's one solution yet. We're open-minded, whether it's tokenized deposits, stable coins, or other forms of settlement. We've also, been invested in an initiative around, wholesale deposits at central banks. I think that payment leg and how it's going to work is still evolving. So at Bank of America, we're involved in, the clearinghouse initiative around tokenized deposits. We're also involved in Project Faro, which is around, as you mentioned, regulated stablecoins and even more broadly around Zelle payments. I think that this ecosystem, the payment leg for the digital asset, is one that the industry is still solving for. I don't think that we have one clear-cut answer yet, and we're remaining open-minded and working on all fronts.
I mean, the technology is certainly evolving, but I wonder, as you look out, what's the single biggest obstacle to digital assets becoming permanent?
Yeah, that's a great question. I think that it's not about proving the technology anymore. I think it's about proving, the benefits and how we're going to scale this. We need to move away from just thinking about how could we integrate the technology to how we are really going to explore business benefits. The complexity of that question is high. These challenges are new, whether it's thinking about things like, gas fees or 24/7 staffing or, digital custody. These are all new questions, and actually proving the economics for this for different institutions. Everyone's going to come up with their own math around this. So I think in terms of getting to where we can scale, and again going back to the resiliency has to operate in all environments. That's where I think some people think that this isn't moving as fast as it can with larger institutions. I can't overemphasize the complexity of doing this at scale and proving the commercial benefits.
You've been at BofA since 2018. You're new to this role specifically, or the addition of this role. Yes. We are going to keep in touch. We hope to have you back here, sitting right here in 6 months. When we do have you back here in 6 months, what will you tell us that will prove that what you're trying to build succeeded?
Well, I'm going to have to think about the percent for the next 6 months. Look, I think for us, like I said,
but there have to be some benchmarks or some internal goals.
Yes, I think we're going to start with the foundation and building that platform and making sure that it is interoperable for any emerging use cases. We know that this is coming fast and furious to all pockets of the financial sectors, and we need to make sure that we've built a platform that can adapt quickly. And I think those will be the benchmarks that we measure ourselves against.
What I see as a Bank of America customer, what will I see?
I think you'll
different. Anything different?
I don't have. I'm a couple of days into this role, so I don't have a crystal ball on what you're going to see in 6 months. What I can tell you is that we are firing on all cylinders around deploying, building a stable platform, and really starting from the center out. What talked about some of these themes around digital collateral, digital cash, and building out from there. Because I think once you have some of these building blocks in place, all the different things that you might put on top of that platform will become easier and easier. So that's our focus.
And that's what he's going to end up seeing at some point.
Yes.
We appreciate you coming in, Sonali, and please do come back. Don't be a stranger.
Thank you.
Sonali Theisen, she's recently been named Global Head of Bank of America's Digital Asset Platform. Well, coming up, Hut 8 shares surging after the firm doubled down on AI with a second data center lease for $9.8 billion. It's part of a growing trend in the industry. That's next. This is Bloomberg. Hut 8 has announced a second 15-year lease for its Beacon Point data center campus. They design, build, manage, and operate data centers in the U.S. and Canada that power compute-intensive workloads like Bitcoin mining and AI. Bloomberg's Monique Malima has been reporting on this story, and she joins us now. Scarlett and I were just talking about this, Monique, the identity of Hut 8 and what investors need to understand. Is this a company that's going all in on AI and getting away from Bitcoin mining? Is it a Bitcoin miner that's adding a little bit of AI? What is its identity right now?
Definitely they are going all in on AI. They've been really focused on expanding into data centers specifically for AI, and they've been transitioning a lot of their Bitcoin mining into these types of data centers. They still have a bit of exposure to Bitcoin because they have the stake in American Bitcoin. So they still have some of the impacts of the declines we've been seeing in the Bitcoin prices, but they've really wanted to focus on this new and growing opportunity of all this demand for compute for artificial intelligence that has better economics than Bitcoin.
You mentioned American Bitcoin. This is the Eric Trump and Donald Trump Jr. Bitcoin mining company. We've talked to Eric Trump several times about this in the last few months. Does this mean anything for their stake in American Bitcoin, or the way that I think analysts are thinking about American Bitcoin's commitment to Bitcoin versus AI?
Right now, analysts aren't really thinking about this impact that it's going to have on American Bitcoin. American Bitcoin has said that they are going to be focused on Bitcoin mining. That is the purpose of the company. They are not looking to get into data centers at this point. But for Hut 8, they're going to still be focused mostly on data centers. Analysts have noted that it's kind of unfortunate that the stake in American Bitcoin is going to weigh on them as Bitcoin price declines impact the Bitcoin mining economics. But they're really hopeful about the growth in AI, and they expect to see revenue and earnings growth from this Beacon Point data center. So that's supposed to help them going forward, even if they're going to see a bit of that negative impact from the Bitcoin.
Oh, so you went right where I wanted to go, which is this idea that this is additive to the fundamentals for the company. I'm looking at Hut 8's share price, and it surged 10% yesterday. It's adding another 7%, 7.9% today. Is there any analyst out there who's kind of skeptical or perhaps not as convinced of this move?
Right now, not really. The analysts are really hopeful that this is going to be a good transition for the company. With this new contract in place, the Beacon Point data center is going to be fully commercialized. So they now know and are able to predict what the revenue and earnings for that are going to be. And they're expecting to start to see some growth for that in 2028.
Right.
And they're also hopeful that this now also shows that other data centers that Hut 8 works on in the future are going to be attractive to these AI companies.
All right, good stuff. Thank you so much, Monique. And of course, you look at Hut 8 shares up about 400% over the past 1 year. Thank you so much. Coming up next, Tim.
The Clarity Act expected to advance to the Senate floor. Also, 21 Capital shares falling after CEO Jack Mallers announced that he's stepping down. That's next on Bloomberg.
Welcome back to Bloomberg Crypto. I'm Scarlett Fu alongside Tim Stenivek.
Well, a proposed merger has been called off. Shares of 21 Capital down today. Bloomberg breaking the news that it will not combine with Strike and Electron Energy. Also, CEO Jack Mallers stepping down from 21, but he will remain CEO of Strike. He posted a video on X today.
Hey, everyone. I have decided to step down as the CEO of 21 Capital. The people involved in 21 are immensely talented and committed to what they believe. But sometimes people can look at the same opportunity and arrive at different conclusions as to how to build it. I have never believed in Bitcoin more than I do today. I wish 21 and the team nothing but the best. And I am back to work, working on Bitcoin for Bitcoiners at Strike.
Well, for more on Jack Mallers stepping down and other top stories of the week, let's bring in Bloomberg Intelligence senior analyst for crypto and digital assets, Dee Sharawat, joining us from Boston. Dee, I want to start with the news that we just covered and hearing from Jack Mallers, who's been on our program a few times before. What does all of this say about the digital asset treasury business model?
Sure, Tim. It basically says what I think a lot of observers of the model have known for a long time, that there's an exit valve in most markets. In the digital asset treasury model, the exit valve, it doesn't exist. And we're seeing the problems with that with strategy. This is an indication of that. What the three firms were trying to do basically was to vertically integrate and diversify away from pure exposure to Bitcoin. That model has fallen apart today, and I think it's exactly because there is no exit valve in the digital asset treasury model. So I don't think this is a Tether governance issue. It's basically these firms deciding that the model is not going to work, and the structural problem with digital asset treasuries, DATS, this is just another indication of that.
So is this the more to come, Dee, after this, in your view? Is that your prediction?
Well, as long as Bitcoin prices remain under pressure, the digital asset treasury model is going to be under pressure. I mean, look, 21 Capital still holds the second largest amount of Bitcoin after strategies. The firm's not going away. But clearly, as long as Bitcoin prices remain soft, the entire digital asset treasury model remains under pressure.
All right, so that's one of the big stories of the week. The other big story is the Senate is now targeting a floor vote on the Clarity Act sometime this week. President Trump, we know, publicly pushed for passage back on July 13th. Prediction markets, however, are still pricing in 2026 enactment of the clarity vote at around 35 to 40%. Dee, what's the industry missing, or what are prediction markets missing?
Yeah, sure, Scarlett. So, if you look at the stock prices of public companies in this space, they've shot up this week as well, whether it's Coinbase or Circle. I'm not a stock analyst, so I cannot opine on where the stock price and the valuations are. But the market seems to be pricing in momentum when it comes to the Clarity Act. But I think Kalshi and Polymarket, the prediction markets guys, are basically, pricing in the math. And the math is not as optimistic as the momentum seems to be. So clearly, the prediction markets, 40%, I looked at the numbers actually for Kalshi, their odds of this thing getting passed before November, I think, is at about 4%. It's about 40% overall till the end of the year. So I don't think that if you look purely at the price momentum in the stock market moves is much to go by. We still have a long ways to go before clarity gets passed. Obviously, you're going to have Nathan, another Bloomberg reporter who's much more attuned on this stuff. But I think more important to step back is, what if clarity gets passed? Three major things get fixed in this market. One, the problems between CFTC and SEC jurisdiction over crypto get clarified. Two, tokenization goes in the fast track. It's absolute approval. Third issue is that all the institutional capital waiting on the sidelines gets released. If clarity does not get passed, all those three things are off the table.
All right, and we also got to get your take on perpetual futures, perps. Kalshi just filed to expand its perpetual futures beyond crypto into metals, into FX, into energy. Bitcoin perps have already done $16 billion in 6 weeks. I know you've been writing about the perpetualization of everything, all assets. Is this it? And what does it mean for a company like the CME, whose lawsuit was ostensibly about crypto, but whose actual business is about commodities, that Kalshi is now laser focused on targeting?
Scarlett, great question. And look, perpetuals are here, whether we like them or not, whether we think that they are massive, leverage opportunities for investors. But, if you look at the success that Kalshi has had over the last 6 weeks, $16 billion of activity in 6 weeks' time on BTC perp. Look, for Kalshi and prediction markets guys, actually for the entire sector, even for CME, this was never about just perpetual futures on crypto. That's just the start of it. It's really about perpetual futures on all commodities, which Kalshi has already asked for approval from the CFTC on now. Equities might be next. So the fight was always about perpetuals for all instruments as the next version of, next leg of derivatives, moving forward. That's why CME is concerned. CME is not concerned because Kalshi is offering BTC perps. They are very concerned about prediction markets guys encroaching upon their turf when it comes to the mainstream commodity derivatives, which is obviously the blue chip business for CME.
Okay, so this is a really good segue to our final topic of the week, Dee, and that's with what happened with the DTCC pilot. So we're talking a little bit about plumbing here and tokenization, but you're going to explain exactly what this means and the implications of it. The $114 trillion backbone of every U.S. stock trade went live with limited production trades of tokenized Russell 1000 stocks. You've got ETFs, treasuries, BlackRock, JP Morgan, Chase, and more. 40 firms are participating. Where does DTCC's pilot fit into the broader tokenization landscape? You've written about this, and what could actually change for institutional investors between now and when it launches in October?
Tim, what could change is this is the DTCC. This is the backbone of U.S. clearing and settlement for the last 50 years. If they are under an SEC exemption talking about tokenizing equities, you got to take that seriously. So this is not, crypto native companies testing out tokenization in a sandbox. This is the first attempt. This is firms, select number of firms between now, which is July and October, doing test trades, but live trades, using the tokenization platform of DTCC. If that goes well, in October, this experiment turns into a live option, which means option being it's available for people to actually do stuff on tokenized equities starting in October. So it becomes mainstream. After that point, it's about economics. The debate whether tokenized securities are more economical, more convenient compared to traditional equities, that debate will only be evident if institutions decide, asset managers decide, to pick tokenized stocks versus regular stocks. That decision will be made after October, but right now we're paving the path towards making that happen. So this is absolutely an interim step, but a very important step for U.S. capital markets and U.S. equities to move on chain.
All right, fantastic to get your take on all of this. Bloomberg Intelligence senior analyst for crypto and digital assets, Dee Sharawat, joining us from Boston. Coming up next on Bloomberg Crypto, the territory of Bermuda working to build a fully on-chain economy that is being spearheaded by the Premier and Minister of Finance, the Honorable David Burt, who joins us in an exclusive coming up. This is Bloomberg. And that brings us now to political exchange. As Nora was just telling us, digital assets are gaining alongside crypto stocks after Treasury Secretary Scott Bessent said the Clarity Act is at the, quote, 1 yard line. Nathan Dean is senior government analyst over at Bloomberg Intelligence. He's been closely tracking the Clarity Act, and he joins us now. Nathan, what can you tell us about what key hurdles have been crossed as a result that has put the Clarity Act perhaps on course for passage sometime soon?
Yeah, so there were really two hurdles left, and the first one that Secretary Bessent is talking about is ethics language. Now, it was reported last night that President Donald Trump has signed off on the ethics language that's in the text that we haven't seen, but it's important to note that the Senate Democrats have also not seen this. So we are cautioning our clients that Senate Democrats may have a different take, so just keep that in mind. The other hurdle that's out there right now is language tied towards essentially bringing crypto platforms like Coinbase and Robinhood up to the same level of scrutiny like banks when it comes to Bank Secrecy Act, Know Your Customer, and customer protections. But I think both can be resolved, and that's why we're at a 60% chance that the Clarity Act can pass this year.
This year, do you agree with the Secretary that it's at the 1 yard line?
I do. The reason being is the Senate is here for 2 more weeks and then they leave for the August recess. And if it doesn't pass before the August recess, look, it's going to face a very challenging future because September is going to be tied up with the government shutdown and then we're in election season. So what Secretary Bessent is essentially saying right now is the time to vote on this. And I do think that Senate Majority Leader John Thune is going to schedule a vote and put both folks on the Republican and the Democratic side of the aisle on record. Are you going to be for this or not? And that's why one of those pressures, I think, eventually convinces enough Democrats to go along with it.
All right, fantastic to get your analysis there. Nathan Dean, who's been on top of all this from the very beginning. Nathan Dean over at Bloomberg Intelligence in Washington. And if the U.S. does get its regulation for crypto settled, what does that mean for other nations that have been pioneers in this space? Does it erode their advantage in any way? One such territory is Bermuda. This past year at Davos, Bermuda announced plans to become the world's first on-chain economy. What does that mean? How does that work? We're pleased to welcome the Premier and Minister of Finance of Bermuda, the Honorable David E. Burt. Thank you so much for joining us, Premier, and it's so good to speak with you. We really appreciate your making the time. You know, when people think about Bermuda and its industry, reinsurance always comes up first. It's the biggest industry in Bermuda. The island serves as the base for many of the world's top insurers. Take a step back for a moment here and talk about why you began exploring blockchain as a positive for Bermuda's leadership in this industry rather than a threat, because I think that has a lot to do with the origin story of crypto and blockchain in Bermuda.
Well, absolutely. And it's great to be here to talk to you and your audience. Bermuda is known as the world's risk capital. We have amazing insurance companies that are here. But back in 2017, like how today the conversation is all about AI, back then it was all about blockchain. And blockchain would be something that could put our main industries at risk. So what we said is that we wanted to make sure that our regulated financial services companies could innovate here locally under a regulated regime, have that clarity, and be able to then go ahead and develop. And so that's where all of this came from, making sure that we can have innovation in financial services based on our insurance market.
Well, as we mentioned, you made this announcement at Davos earlier this year. Since then, you've airdropped USDC to residents. You've piloted government fee payments through the DMV. You've built a Bermuda digital dollar on Stellar. Give us an update on how it's going so far.
Well, I think what it is, it's a journey, and I should take you back because 2018 is when we passed our Digital Asset Business Act. That Digital Asset Business Act allows us to license digital finance companies that we see, and when some of the major names globally, whether it's Coinbase or Kraken or Circle, et cetera, all have Bermuda operations where they're doing a number of things. At the Davos announcement, this was more around how do we go from having the companies that are regulated to actually making sure that blockchain payments and these things are integrated fully inside our economy. That's what we came with the On-Chain Economy Initiative, having partners such as Stellar, such as Coinbase, such as Circle, and others that are working alongside with us to make sure that as we build out across, citizens have access to these tools, businesses have access to these tools, and we're actually making sure the government is accepting them and making sure we distribute them. So we've made, cabinet has approved changes to our acts where the government of Bermuda will be able to accept stablecoin payments, manage stablecoin payments, and invest in certain digital assets. And we're looking forward to making sure that we keep our leadership in the global digital asset regulation space.
One thing that strikes me is that Bermuda is able to be so nimble and so innovative, in part because of its small population. You have 60,000 people, and your size allows you to move and experiment quickly. You compare that with the U.S., which is a giant, a battleship. A skeptic might say that this is a fascinating sandbox, but perhaps irrelevant at scale. How would you respond to that?
Oh, well, I would say that Bermuda is certainly not irrelevant at scale. If you just look for where we started on our insurance industry, we are known as the home of regulated international financial services companies that want to make sure to push the envelope of innovation, and our regulatory regime is second to none globally. And so we always know that people will say these things about Bermuda, but the reality is that companies that are operating in our space know what they get clarity, and they have the ability to serve customers all around the world. So yes, we are a good sandbox, and we want to make sure we work with the United States. We have given testimony in Congress on numerous occasions. We have direct links with the SEC, with Treasury and others, and we're sharing our information knowledge on regulating this. The government of the United States has certainly reached out to us because, as the president has given his, I guess, push to make sure that the United States is able to have regulation around the digital asset industry, we are one of the people who have the most experience in doing it, as we've been doing it successfully for 8 years.
Mr. Premier, you chose USDC. It's the USD stablecoin issued by an American company as the backbone of the national payment system. Bermuda uses the Bermuda dollar. It's pegged 1-to-1 to the US dollar. If USDC becomes the dominant medium of exchange in Bermuda, have you effectively outsourced your monetary infrastructure to Circle and also the US regulatory system?
Well, that's a great question. And so there's a few things to say about that. Number one, USDC is easiest for us. We have a long relationship with Circle, and we're continuing to do that. But one of the things we want to do is to actually have a digital version of the Bermuda dollar. But here's the reality. The reality is that the Bermuda dollar itself, I like to call the original stablecoin, as we're pegged 1-to-1. So maybe it's in a banknote form versus a digital form, but that's the same thing of which we are creating already. And so we're basically mirroring what exists currently right now in digital form. But I think it's important also to note that we are working with partners to launch the Bermuda digital dollar. And the Bermuda digital dollar, of course, will go alongside the other digital assets inside of our ecosystem. And we want to make sure that we build that out. That's going to be privately issued, as we do not want a central bank digital currency. But what we do want is, as our local dollars are currently issued privately as well by banks, we want to ensure that we are able to, I guess I would say, have the Bermuda dollar working alongside the US dollar as it does right now inside of our economy.
A big thank you, Premier, Minister of Finance for Bermuda, the Honorable E. David Burt. Mr. Premier, please do come back again soon. We appreciate you taking the time this afternoon.
Absolutely. Take care.
Well, coming up next, prediction market bets surging during the World Cup, taking a large chunk of market share from traditional sports books issued through, though they still linger for the growing business. We're going to discuss next. This is Bloomberg.
Let's get to the odds, an in-depth look at the booming growth of prediction markets. As Spain made its way to becoming the World Cup champions, overall prediction market trading surged, far outpacing the growth at traditional sportsbooks and really driving home the threat that companies like Kalshi now pose to the sports gambling industry. Bloomberg's Nathaniel Popper has been reporting on this, and he joins us now from San Francisco. So, Nathaniel, can you just give us some numbers to showcase really how much trading in prediction markets overtook traditional sports betting?
Sure. This World Cup was pretty amazing in terms of the growth we saw. Kalshi, which has become the industry leader, hit a peak right before the World Cup when the Knicks were going on their NBA Finals run. A week later, during the World Cup, Kalshi doubled the volume that they had seen at their peak during this Knicks run, which was itself something like 10 times the trading volume wagering that Kalshi had earlier in the year. And, gambling companies, sports books, DraftKings, FanDuel, They, a year ago, they were brushing this off as a sort of rounding error. But now, during the World Cup, Kalshi and Polymarket, to some degree, the smaller competitor, had more users on their apps than either DraftKings or sportsbooks in the U.S. So they have become a real competitive threat, real players in the sports betting industry.
Yeah, it's remarkable to see the growth here. I also want to mention the company Kalshi that has added 3 million users just over the last month. My question for you, Nathaniel, can in your view, Kalshi's like they're trying to have it all and do so much for so many different groups of people, but yet the vast majority of what still happens on these platforms is sports betting. And I'm wondering if, in your view, and you've reported a lot on this, these companies can become for institutional investors and allow institutional investors to price risk rather than just focus on sports.
It's a great question, and it's sort of the conundrum that lies at the center of the rise of prediction markets. The prediction markets, Kalshi, have sold themselves as the sources of the truth on matters of economic consequence, on Fed rate raises and election results. And that was viewed as the original promise of these exchanges. But as you mentioned, sports betting has become 90% of the trading volume on these exchanges. And it's a sort of balancing act for Kalshi and Polymarket. On the one hand, they've increasingly made the argument that sports betting is actually economically significant activity. They like to point to instances, around the Knicks playoffs, around the World Cup, where, a city might lose money if a team loses a game or wins a game. And, if the Knicks series had gone to Game 7, there would have been a lot more economic activity, around that Game 7. And so you could see a world in which Wall Street firms, in which real institutional investors might want to hedge their economic risks around this. I think that most people probably view that as a bit of a stretch. Clearly, most of this is just, old-fashioned sports betting.
Yeah.
And I think the question is, do the people who come in through the World Cup through sports betting turn into more legitimate traders?
Right.
But for now, Wall Street firms are getting increasingly involved, and so they are viewing this as a sort of potentially new asset class.
A big thank you to Bloomberg's Nathaniel Popper. Check out the story that the team worked on. He was part of it. Prediction markets are minting a new type of insider trader. It's today's big take.
All right, that does it all for Bloomberg Crypto. Join us same time, same place next week. In the meantime, as we hand you off to Balance of Power, we have stocks at session highs right now with the Nasdaq up 1.4%. This is Bloomberg.